Hello and good morning. Welcome back to the 1080p stream with myself and Jose. Well, let me flip this. Much better. Much better. How are we doing today, Jose?
Pretty good, I think. No complaints on my end. Nothing crazy for any of my stocks. I don't know if anything crazy for. I know yesterday there were a few earnings on some exciting stocks, but nothing on my end. How about you, Neil?
All good, all good. Yeah, we're going to have a look at some of the reactions of these stocks. We're going to talk about Salesforce as well as software stocks. Because, yesterday we had quite a lot of these popular, smaller name stocks that reported. The Archers, the Big Bear AIs, AST Space Mobile, and who else? I think AMC reported as well yesterday. I was not that surprised with some of these stocks' reaction, to be honest. This morning, we did have this morning C Limited, C Limited, and Circle also reported earnings this morning. And later today, we do have a CoreWeave that report their quarterly figures. We also have a CPI report coming out. If anyone has the numbers before we do, post it in chat, and we will talk about that. It's going to be an interesting one, especially as we still await a rate cut, right?
Neil, we also have some requests here. If I don't know when DLocal reports earnings, but people are going to want to get some maybe thoughts on this one beforehand. They do mention the CPI is out. Again, this is not something I follow too much, Neil, so we'll definitely let you take the wheel here.
If the CPI is out, then we shall pull it up. CPI is out, indeed. Let's just pull this one up. It's better. So, US CPI for July 2025. A CPI year-over-year increase 2.7%, expected number 2.8. A core CPI 3.1%, expected 3.0. A month-over-month 0.2%, same as expected. And the core CPI month-over-month 0.3, also here, same as expected. And so this is what we're looking at right now. I mean, we are in July, which means maybe not all of the impacts from the tariffs can already be seen in the numbers, but it's not a huge shock It's not a shock at all, right? Because CPI is cooler than expected, although core one is a bit higher. This one right here. We do have, let's see if we do have more information here. So yeah, amid tariff uncertainty, still no major impact. But then again, people will say, okay, but we have to wait until we see it maybe in the next quarter, the quarter after that. But so far, yeah, I guess it's better than feared. I guess that's the sentiment right now. Better than feared. Why is this popping up right here? We don't know. Weird articles popping up today. Futures are green. It's next to Putin as well. Futures are green. I mean green. Yeah, it's flat. It's, unless I have to refresh, and this moves quite quickly right now. Because it does say Dow futures rally 200%, but I'm not seeing that yet. So that might move.
And Neil, question for you. Again, this is not something that I follow too much, but one thing that I heard from you was at the moment we still don't have maybe much impact from tariffs. When do you think, as if there are any impacts from tariffs? I'm not saying there aren't, but if they are, when do you expect those to really show up? Like when is that data point for that?
Okay, first quick correction. The last updated number here was before we even started the stream, so it will probably pop up. It will probably pop up already. When will it show up? Good. I mean, people thought it would already show up right now, and it didn't. So I mean, these things do take time, right? Because we've had flip-flopping tariffs, right? We've got extensions, then we've got tariffs, let's say 20%, and then it's lower to 15. And so it's difficult to know when that the real impact will be. Because when you make deals, then the tariff change. When there is no deal, then you get an extension maybe. And so to not see an impact at the moment is maybe normal. Is maybe normal right now, because again, yes, we've had this tariff situation since April, but we've also had an extension. I mean, 2 extensions, maybe not even 3 if you include China. We've had some deals. And so it balances out. The numbers are, of course, not that low, right? We should be closer to 2%. But you also have to remember that inflation was coming down regardless before we had this whole tariff story. So inflation coming down, tariffs might maybe increase it. And so now you're balancing it out. And this is where we're at the moment. But I do think that the focus should be energy. Energy prices are, of course, lower than before. I think shelter is doing much better than before as well. And we'll see what happens once the Fed does cut rates. Because when they do cut rates, then, of course, you are incentivizing more activities, which means there will be more spending, which could also lead to a reacceleration of inflation, which of course is not really what you want, which is why they're waiting so long, and which is why they'll probably do 25 basis cuts in September and maybe 25 later in the year. Because if you do cut too fast, and then we go back to, inflation is running again because, well, rates are down, then we've just lost 3 years, which is not great.
Sounds good, Neil. Sounds good. I don't know if there's anything else here that you want to tackle before any questions. I don't know if we have any questions coming in here.
Now just going back to the DLocal one. DLocal reports tomorrow. DLocal reports tomorrow. Maybe I'll pull up the estimates from fiscal, because they report tomorrow. I know usually they report, stock goes down even if it's good. But I do think that as long as the business is doing better, that's the most important part. So let's pull this thing up.
And then after that, I have some stuff for CoreWeave, Neil. I know there might be some people that might be curious about CoreWeave. They do report today after the market closes. And obviously after the excitement from your baby Nebius, it seems like yesterday, I think we even saw, now our not together, but the yesterday I think we did see a price target increase on CoreWeave to like I think 135 or 145. So there's some, I guess, sentiments towards the stock right now.
Yeah, no, for sure. I mean, I would be surprised if they report bad earnings, a bad report. But we'll see. We'll see. We'll talk about Nebius in a bit. So consensus numbers for revenue for DLocal, $229 million. EPS for the company is expected to be 14 cents. This is a fast-growing, profitable company, unlike many others out there. As for, well, free cash flow estimates, we don't really get per quarter. Let's see if we get EBITDA. We've got that, 55.79% for DLocal. They report again tomorrow. Let's see if we have last quarter results. TPV did grow 53%. The thing with DLocal is everybody's focused on, oh, the take rate. The take rate is coming down. We know the take rate is coming down. But the most important part, and this is what they said, look, take rate is coming down, but the growth in TPV, the growth in volume will make up for that decrease in take rate. It's a market that they're playing in that is huge. And so it makes sense for them to grow the volume, TPV, to grow revenues. Margins are also, by the way, recovering a little bit. Gross profit is recovering, I think, the last 2 quarters already. And so you're getting these types of conversions. Free cash flow to net income of 85% conversion here. This is a company that is very small. I'd be more worried if this was a $150 billion or $100 billion company playing in that market and seeing the take rate come down and maybe not growing as fast as previously. But this is a $3 billion company. It's a $3 billion company growing in an immense market. It's already profitable today, and it's still growing quite rapidly, right? Expected to grow 26.8% compounded for the next 2 years. EPS 21.4. It's a forward PE here of 18.5 times. I mean, that's a joke. So I know.
I laugh. Get it? Because it's a joke.
Yes, I know. Haha. So yeah, DLocal, I think for those that are patient, which I am, and probably a lot of the holders are as well, I think this thing can move up quite rapidly. I mean, the stock after every earnings report does move up or down quite drastically. Hopefully this time we are going to see a move on the upside.
Yeah. And let me share screen here, Neil. I think maybe I can take what's it called really quickly. CoreWeave pretty quickly here. So CoreWeave, right? I have some of the numbers here from obviously fiscal.ai. So just a quick background for March last quarter, the company reported about $980 million in revenue. For this quarter, it's expected to be 1.1. So it's going to be the first quarter of over a $1 billion quarter. And then you can kind of see that expected huge revenue growth. We can see by March 2026, we're expecting this to be about a $2 billion per quarter. So this is, I guess, what you're really buying into CoreWeave is expecting these, even after right now seeing triple digits year-over-year growth, that for 2026, you're also going to be expecting those 100% plus year-over-year growth. So we're going to want to make sure that at least this trend continues for CoreWeave. Earnings per share, the company is still not profitable, but it's going to be burning a little bit less than it did for March. On March, it burned about 61 cents on earnings per share. For June, about 20-cent loss, and for September, guiding about negative 22 cents, so around that 20 range. So it's not expected to be profitable anytime soon. So something to watch out. This is, I think, crazy. The capital expenditure this company is expected to use. So in the last quarter, it did about 1.4 billion. For this quarter, the market is expecting somewhere around 3.5 billion. But for September of 2025, I don't know if most people remember, they mentioned for this year, they expected to spend somewhere around $20 billion in CapEx. And if you're only spending about $5 billion in the first half, you need to spend that other 15 billion in the second half of the year. So in September, you're seeing that CapEx is expected to be 7.1 billion, which is wild. That's kind of what some of the big companies used to spend just about 5-6 years ago. And then for quarter two, you're expecting about $8 billion in capex. Now you would say yes. Luckily, this company is doing all right, but I think it's a little bit scary. Obviously, this has been the biggest bearish case, but I think if you don't start to see maybe free cash flows improving, this is going to be wild because March you had a burn rate of free cash flow of 1.3 billion. For June 25, you're having a cash flow burn of about 3 billion. Now you're moving to September and December. You're expecting cash flows to be burning at a 6 billion plus per quarter. So massive cash flow coming, cash burn coming. So I think one of the biggest things that they're going to have to discuss is all these buildings that they are, all these data centers and AI infrastructure that they are building. When should they start to see this free cash flow coming in and improving? Especially since just in the past 2 months or 3 months, the company has done various debt securing. So on July, it did about 2.6 billion of 31st, which was completely independent of the July 28th, which was about 1.8 billion in senior notes. Then on May 28th, they did about 2 billion in senior notes. So the company has kind of raised a lot of debt. They still have a lot of outstanding shares, which they can sell to kind of either build more equity. They continue to make investments. They made about a $6 billion investment in Pennsylvania. I forget what was the time frame, but obviously to build massive data centers. They acquire Core Scientific. Well, they're attempting to acquire it. But I don't know if you've heard Neil, there's been a lot of headwinds about this merger. A lot of obviously Core Scientific shareholders are complaining that there's like no collar, no cash components to protect against further declines. And CoreWeave stock dropped after the peak was kind of that Core Scientific deal. Ever since then, the stock has dropped. I obviously believe that if the stock would have continued to go up, Core Scientific shareholders would have cared less if there was no collar or anything like that. They would actually be saying, look, there shouldn't be a collar. But shareholder law firms are investigating the transaction fairness right now. So that one's going to be interesting. And obviously, they did do kind of that acquisition of weights and biases to kind of improve some of their AI cloud platform solutions. The final thing is lockup overhang. Most sources peg that the IPO lockup expiry is around, some are saying 180 days away, September 24th. Some are saying a few days after the IPO. That's when the real starts. It can kind of go throughout time, but there's going to be a nice amount of pressure right now if insiders start to sell. And I do believe some insiders are going to sell, Neil. I mean, especially since the stock, last time I looked at it, it made $10,000 from IPO into about $30,000. So you 3x, even though the stock has pulled back. This was when the stock was sitting at 129. I think it's a little bit higher right now. So I could see some incentive or excitement for insiders to let go of some of those shares to kind of cash it in. So it's interesting. This is a company, Neil, that if the AI story is going to do really well for them, the debt and all this is just needed to build that massive AI infrastructure. But if there's ever a hiccup in the AI market, if they do a slip up of losing some customers, then having that kind of leverage goes both ways, right? It could be really good in the upside, but obviously it could be very bad in the downside. Luckily, right now, the AI market has shown that it has an infinite money glitch at the moment. But let's see if that continues.
Yeah, I have seen some conflicting reports because this is the second quarter they report as a publicly traded company, or the first? The second.
Second.
Yeah, so I've seen that 2 days after a company reports their second quarterly figures as a publicly
They're
traded company,
able. Oh, they're
that's when the
able.
lockup expires. Yeah.
Yeah.
So
Okay. So I guess so. It's either 180 days or 2 days after the second publicly quoted reported.
yeah, I guess so. I mean,
Yeah.
so I guess 2 days from now we'll see
Yeah.
if we're going to see a huge dump in prices. Quickly going back to answer a couple of questions with regards to the inflation stuff. So this is basically what has moved the CPI report. So gas utilities up 13.8%, electricity 5.5, used cars 4.8, medical care 4.3, food away from home 3.9, shelter 3.7, transportation 3.5, overall CPI 2.7, food at home 2.2, that's up 2.2, new cars just 0.4, fuel oil down 2.9, and gasoline down 9.5, which pretty impressive. Then we have here Jeremy from Wisdom Tree. What is the true inflation rate? There are real problems in the Bureau of Labor Statistics, BLS, Bureau of Labor Statistics. So why does he write twice statistics? Anyways, the problem here is shelter in those numbers. Subbing in an average of a more real-time shelter shows the following till. As you can see, okay, maybe that's not good enough. So that's good. The blue line is the real-time shelter numbers. If we follow that, we would be at 1.83% instead of 2.7%. So below the 2% target for the trailing 12 months headline inflation, that is. Then if we look here with the alternative, again, the same thing, but core CPI, we would have been 1.95% instead of 3.1%. So again, well below the numbers that we're getting right now. Shelter inflation, if we're looking at the real-time metrics according to Wisdom Tree, that's at just over 1%, whereas the BLS housing metrics are at 3.7%. The problem with the metrics, we always said that these are always lagging metrics. We see what has happened before, not what's happening right now. And so, yeah, we'll see. I mean, this again could push for more cuts if this is truly what's happening, where inflation is already closer to 2% or maybe even below. But yeah, I don't understand how in 2025 the systems in place are still not highly optimized to get real-time data. I know that it's close to impossible to get all of the data that you need in real time because some of the people don't report or don't report on time, etc., etc. But I do think that a large chunk can be digitalized, and so we could be getting more realistic data. Because I mean, we've seen that with the revisions before, right? Whether it's revisions on the downside or on the upside, I just find it very strange that the country where companies spent almost $500 billion in capex for AI build-outs and all of that, we can't figure out how to come out with real numbers. I mean, imagine a company comes out and reports revenue of $10 billion, EPS of 2 cents. Through 2 months later, they're like, no, actually, remember the $10 billion and the EPS of 2 cents we reported 2 months ago? It's actually $7 billion and 10 cents. It wouldn't fly. It wouldn't fly. And so, I don't know, I find this just quite strange. Either don't release the numbers until you're 100% certain that that's the real number, or come up with a better solution.
Yeah, we'll have like a massive warning. This might not be accurate, and we will be updating in the next blah blah blah.
Yeah, this is just for show. We'll come back with a real number later down the line. But yeah, I know it's ridiculous. I do want to touch a little bit on the software stocks, because as you can see, year to date, Salesforce down 30%, Accenture down 32%, Adobe down 25%.
Damn, Accenture sucks.
Fortinet down 21%. We have here, what is this? I don't know if it's VeriSign or not, probably not. But software names, even Atlassian, ticker symbol team, they've all been crushed, unless you're
Neil, what's that under you see where cadence is? 3 down. One no, okay, go down rope and go, I can't really see, and go one more. The one that's down 11.15.
This one.
Yeah, what is
Datadog.
It's Datadog. Okay. Yeah. Oh wow, that one's down. Interesting.
11.5. 1.5.
Is this year to date or
year to date?
Okay.
Year to date. Yeah. It's quite astonishing because, okay, you could say on the one side, you know what, year to date they're down because at the start of the year, a lot of these stocks were just overvalued. And I think it's fair to say for a lot of these names, maybe they were too stretched for the growth that they were providing. But today, I mean, Salesforce, still an amazing company, might not be growing high double digits. Adobe, still a good company that's growing, very good margins, down 25%.
I am curious, Neil. Now that you mentioned that, obviously year to date is crucial, and like you mentioned, I think a lot of stocks were pretty pulled ahead in at the beginning of the year. Does it how different is the story when you look at it in the past year? CRM, okay. I mean, not the greatest returns. I mean, now only up 7.5%. You would expected that to still be a little bit higher.
Datadog
But you
is
still see a
green.
nice amount. Yeah. Accenture still a dog down there, dying. Adobe, 36%. That's
Worse.
What was Datadog there? 13%. So not that much of a growth. I would have expected that one to. Oh wow, interesting.
Yeah, I mean, if we look, 3 months, I don't know if 3 months is enough, but 3 months
This whole
brings
sector
us,
has been
yeah.
beat up.
I mean, a lot of these names, even also Okta, for example, a lot of these names are back at the April lows. Not a lot of names are back at April lows, but software names, yes, software names have been coming down quite drastically. In the fears of AI destroying their business, then not managing to maybe integrate AI properly. I know it's a lot of question marks for companies that still
Yeah.
seem to be doing well.
And that's the thing, right? I mean, it's all just questioning. It's we still haven't seen that true case of AI is eating your lunch. It's just the thought process, and unfortunately, it started with Adobe, right? And it seems to be spreading like a wildfire throughout that sector. Adobe has, and to me, it's like obviously it gets me a little bit excited. It's like there's always a bear market somewhere, right? There's we're having that excitement on big tech, on semiconductors, but the software space is lacking here. But the question is, Adobe has been a dog like we saw for over a year now, because that sentiment doesn't escape the software space. Even if these look valuable, do you think the sector is gonna when does the market sentiment start to shift? What is gonna be that aha moment? See, software names aren't gonna crash with this AI story.
That's the I guess that's the question. That's the probably multi-billion-dollar question here,
Yeah,
right?
yeah,
Because
yeah. Sorry, go ahead, Neil.
yeah, no, because when you look at the names, and by the way, all of them are back at April lows.
Wow.
When you look at the names, actually, I have a video coming up looking at some of these names. It's a lot of these companies have seen their margins improve over the past couple of years. It's just that, yeah, maybe growth has slowed down, but it's still growing. Most of these companies are better companies today than they were before. Some of these companies, yeah, were very, very expensive. And for example, a company like Atlassian
Mhm.
here we're actually back to levels, October 24 levels, because they also just reported
Yeah, I saw a
not
company
so long ago.
Workday back to like 5 year levels. I think it was like if you look at the 5 year return, I don't know, it might be up amount, but Workday, um, I saw if you kind of look at it in the 5 year time frame, it's back to see those levels that I think. Well, that's 2023, but I think even if you go back, it was in levels
Workday or
first
month?
reach. Monday. Sorry, Monday. Yeah. There should only be one company with a day.
Actually, we're
So if
back
you
to April 24.
but if you scroll back, I mean, like the first time you hit those levels were just like in. So if you bought in July of 2021, you're back to where you're at now.
Correct. But the company arguably today is better than before.
Yeah. So it's crazy, and I wonder if also, Neil, the negative sentiment is coming from the reactions that we're seeing right now as well, like Trade Desk, right? It's some people are wondering what is eating it up. Obviously, you have that big competitors like Amazon and other places, and some of the overstepping some of the ad solutions that they used to have. But I wonder if all that negative sentiment continues to add a little bit of fuel to that AI fire. And I think that's the biggest risk to software stocks. It's not the companies going down, but it's the emotions of investors. They're going to buy into these software spaces. And the thing is, you don't know how long this bearish story is going to last. And if you just buy and you don't outweigh the bearish story, you're going to sell out at probably a loss because you were impatient. And then within the next few months, the turnaround story you could be right about the about the valuation. You just could be wrong on the timing. And I think that's why patient investors usually end up winning in this space.
Yeah, because I mean, again, there is the trade desk, for example. The trade desk is a good company that was just trading at the wrong price. And if you don't deliver the growth that the market is expecting, you're going to get crushed. A company like Salesforce, Adobe is not trading at the wrong price. Maybe the wrong price for the bulls in this case, but it's not like, oh, next quarter Adobe or Salesforce will crash 30%. I don't think so. I think the downside risk, on those companies is quite small at the moment, just because I just don't see any cracks in the business. Yeah, some said here, yeah, just like Google, right? Google also was suffering of, Google is dying, although now maybe it's not dying anymore because we're back close to all-time highs after that nice
Nice.
V-shaped recovery
Yeah.
here. But yeah, it's the markets can stay irrational longer than you can stay solvent, right? That has been
Yeah.
a popular saying for a reason. Now, I'm not saying that the software companies can't be disrupted. I'm not saying that some of these names might actually, maybe be acquired or disappear over time. But I don't see how a Salesforce will disappear.
Yeah.
Even with the rise of a Monday.com, for example, over the last couple of years, a HubSpot, yes, they might have grown faster, but the dollar amount that Adobe has increased in revenue over the past, I think, 4 or 5 years was $16 billion, while HubSpot increased by just 2 billion and Monday by a billion. Yes, they might have grown faster, but Adobe increased $16 billion in dollar amount. So they're like nothing to compare here.
So Neil, has this kind of changed anything of your investment thought process right now? Have you thought about selling any companies and going into the software space? Have you thought about putting new money into the software space? What is your game plan here? Because it seems like you really do like some of these valuations in the software sector.
Yeah, no, I do like. I mean, here another example: GitLab, also back to April levels at just
This
below
one's
40.
I'm oh my god, I'm salivating right now.
But yeah, no, my portfolio, I recently, like I said yesterday, I did almost the full switch from Intel shares to options. I do have some shares left, but yesterday I did open a position in Duolingo finally. Although after I opened it, the stock continued to go down on the day. Yesterday it was down another 8%, so it basically erased all of the earnings pump. This thing was up 30%
Yeah.
or so. Now it's back to levels not seen since a week ago, when the day before they reported earnings.
And what was their April lows? Or that March April lows was around
280.
280. Okay.
It's crazy. I went and saw when I put this on my watch list, and I put this on my watch list right right here, I think. Here. It's when we had that first OpenAI drama.
How's the other one?
$179.
Reddit. How's that one?
Reddit
Is it no? That was
still
pumping, right?
ripping. Yeah.
Yeah.
Still ripping. But to go back to your initial question,
Which I forgot what I asked.
if I'm looking to buy those software
Oh,
names,
yeah.
I am, other than Duolingo, because this is a company that I followed it since $179. So I bought it at 2x the price that I initially should have bought it. But okay, I do think that the company today is again better than before, even if the market still thinks that OpenAI will destroy the company. Nothing in the numbers show that the green owl is slowing down. Other than that, I don't. It's not like I do not want to buy a Salesforce on Adobe right now, because it does. Hated names are always a good buy, in my
Mhm.
opinion, when there are good companies. Like good companies, hated stocks, usually that's a good buy. I've seen it time and time again. Then suddenly they become lovely companies because they're up. So yeah, I
And Neil, I know you already have a lot of not a lot. You have some hated companies in the healthcare market. You have your United Health, and you have your I think Oscar.
Oscar. Yeah. Although that's less hated,
Yeah.
just a stock
Do
that
you
happens to be red.
do you think if you didn't have those, what I would say, two hated stocks, would you be more prone to maybe looking into the software space outside of just your I forgot the one you just mentioned, um, Duolingo?
Duolingo. The thing is, I've wanted to buy Duolingo for a long time, so I took the opportunity now because it pulled back from that earnings pump to finally open a position. But if I didn't have the healthcare names, I I probably would have gone with a software name. The
Hmm.
the question is which one. The
Yeah.
question is which one. But no, in the meantime, I don't plan on opening up uh, software names in the portfolio. One I rather, well, I just opened Duolingo because of that Intel switcheroo I did.
Hmm.
So yes, I did open a position in Duolingo, um, and the rest is still in cash. I might still just increase the positions that I have.
Yeah. And while we're here in the software space, and we're getting some questions here, we're going to take in a bit. But Neil, for me in the software market, right, one of the stories is that AI story. AI is gonna eat up this industry. When looking at AI names, would you rather look at the small companies that have a high growth rate, or the big companies? Like typically, would you look at the Adobe, or would you look at the Figma? Let's say if they hit this, if they were hitting the same market. Um, we know they have not. They're not truly competitive, but if they were hitting the same market, would you in this AI era look more for the top dog, or more for the growth player?
If they were also valued the same,
Hmm.
no,
Or
if they
near,
were
or near. Obviously, maybe you have a better
right,
the how typically a growth and value plate are, or you know the growth are a little bit more expensive in
yeah,
forms
yeah,
of
yeah.
evaluation. So similar to that style.
Hmm. I think the Adobe Figma part question is I would go with Figma if it's like a little bit more expensive.
Mm,
Because essentially, yes, it does. Again, it's growing much faster, and if it's just a little bit more expensive,
yeah.
then fine, I'll buy it. But
Yeah.
today, if I have to choose, I'll choose Adobe at current prices.
Because to me, the way I think about this software space is kind of seeing it how I looked at Google. It's like, is AI going to eat you up? And one of the biggest things for Google is not only did they have the AI infrastructure, um, but they also had the data sets. And I think that is crucial. Um, that is crucial of not dying in the AI industry. So, for example, and I would prefer like the bigger players because they have all this data set and it will secure their strength with any form of AI innovation they're pulling into.
No, I agree. I agree. Um, it's an interesting conundrum right now. Go with high growth plays or go with value plays that have a disconnection. Google, for example, right? It's not a high growth company, but at $150, 160, even 170, the disconnect is big enough for us to make a move and still get market beating returns. And I think that's the answer when talking about an Adobe or Salesforce. I know Google is still in a league of their own, but yeah, you can get outsized returns by buying huge companies at at prices that are just not realistic. We've seen that before, and I think we'll see it again.
Yeah, I think I might start looking a little bit more into this the software space right now for my portfolio. It's sometimes buried in the semiconductor market. I forget there's a bearish scenario or bearish market elsewhere. So do appreciate this. Pretty good. It does seem like Nebius is up nicely pre-market. I saw earlier today they did announce. I haven't looked at it. I haven't seen, but I saw there was just a quick announcement of if that's the reason, sometimes excitement comes a little bit too much. I don't think that's like a reason to be up about 2%.
Yeah, just a continued momentum. Nebius will pull back soon. I hope so. I hope it goes back to pre-earnings levels. I'd buy with two hands. Victor saying Oscar is a high growth company while being underpriced still. I agree. Let's see what we have.
It seems like you saved some people money, Neil. So TTD.
Yes. With the trade desk. I mean, sometimes it's very obvious. It's sad, but sometimes it's obvious. Like sometimes you look at the stock, you're like, this company is about to report earnings, and you can just feel it's going to dump. This was one of those.
Next time, Neil, with those feelings, let us know, and we hit short.
Watch the videos. Roberto saying he hates Duolingo CEO. I think Roberto and Duolingo CEO are both from Guatemala, if I remember correctly. So what's your beef with the OWL CEO, Roberto? Let us know. Let us know in the chat. Dividend Dude here in the house. Have you looked at Fiserv or Fiserv? It's always the same. I think it's Fiserv at the end. I have not looked at it. I don't think there is something similar to PayPal, to be honest. I don't think I've seen any company. What is this? This one. I was like looking at it. I'm like, that's quite strange. Because PayPal is, in my opinion, one of the most dislocated stocks out there right now. But again, I'll be back when this thing is at triple digits. But yeah, Fiserv.
Micron yesterday. We talked a little bit about it. Were you able to read? They were at a conference yesterday. Were you able to read the transcript on that, or you want me to drop some gems on it for you?
I know
you're vacationing.
Gems. I am vacationing.
So for the first time, they did talk about calendar year of 2026. They mentioned that they expect to be fully sold out of calendar year of 2026. They've talked about it in the past that they were like they would have expected to do, but now they kind of gave more confirmation about that. So for the HBM space, so that was the first thing, which I thought was extremely, extremely bullish. The second thing that I really did enjoy is they were talking about the HBM4E market. And they mentioned that the HBM4E market was going to create a market where it's been discussed a lot by a lot of players right now of custom HBM solutions or customizable HBM solutions. And what they mean by that is this HBM actually being connected directly to or near direct to the GPU die or the processor die. This is going to be more of what Micron talked about it, ASIC style market, where if you are a company, you're not going to want to work with 3 or 4 players in this space because the research and development behind it is going to be too expensive. What's going to end up happening is companies are only going to work with 1 or 2 players at most, because if you're, and they talk about it here, it kind of creates that ASIC-like business where it's going to consolidate competitive and it's going to kind of end a little bit of the commodity in the HBM market. I thought that was also pretty interesting. And the final thing that I thought was pretty cool, I think, well, 2 more things. The other thing is, I think we talked about it yesterday, the upgrade in revenue and earnings per share were mainly due to pricing in all their sectors opposed to volume shifts. So they're still shipping the same thing. It's just all their markets are picking back up. They mentioned data center, mobile, and consumer techs are all picking up. The final thing is they're saying that with the current administration, Micron is the only US manufacturer of memory. That alone is creating kind of like an incentive if we're seeing kind of this onshoring of bringing supply. So they got excited about that. And because Micron is here in the States, obviously the other places do have facilities here, but a huge portion of the research and development are already in the West Coast, where you have your headquarters of NVIDIA, your headquarters of AMD, your headquarters of all those people. So if you're really working on kind of that ASIC collaboration, it's easier. They mentioned it's a little bit less frictionless to work with someone with similar culture, similar work times, and similar stuff, because you're able to get that whole team behind you. So I think that Micron did really well at kind of discussing a lot of the bullish sentiments that are possible for them in that investors relations conference.
Makes me even happier to be a shareholder, especially after the BS I had to read last week with some of these no-name analysts and Samsung trying to scare off the market by saying, "Oh, we're coming. Yeah, you're coming for HBM3, my guys. We're already at HBM4 soon. But thanks for playing." I do wonder if we're going to see analyst projections go up after these comments from Micron, because again, they're talking from a position of strength. They're talking from a position of continued momentum, business momentum. So quite happy to hear that. To be honest, there are some questions here
on GitLab. Yeah, there's a quick one here from MJ Neil, and then maybe we can jump on GitLab. Good morning, Jose. Is NVIDIA buy at this rate? Thank you. I mean, MJ, for me, I'm just going to say what I'm doing. NVIDIA is already a big portion of my portfolio. I'm in no rush to buy at all, but I'm also not selling. If I didn't have a position, a company like NVIDIA is one where if I didn't have my full position, I would always be dollar cost averaging. It would just be the size. So at these portions is where I would be doing very small dollar cost averaging. The semiconductor always tends to give us opportunities. In those opportunities is when I would do heavy dollar cost averaging. So this is one of those DCA stocks, I believe. I mean, we heard a lot of great things from all the big cloud server providers. They're all increasing CapEx. We expect fiscal year 2026 CapEx. But this wouldn't be the time where I would be going from a 0% portfolio position to a 10% portfolio position. It would be small dollar cost averaging. Yeah.
What about GitLab?
This to me is for me, Neil, it's a heavy allocation at these price points. I mean, the only thing that I have the fear for GitLab is one, the market having that same fear that we're seeing for Adobe. So it's market not providing returns as a stock due to just market sentiments. One of the biggest things that I see is like, oh, look, but there's Cursor out here. There's all these AI coding tools. And all these AI coding tools that are coming out are great, but they're not the complete suite. Most of the time, you kind of you use those stuff, and then you end up in GitLab to do a lot of the other things you need to go throughout the process, the coding life process, or the workflow of designing code and designing applications. So to me, one of the biggest bearish thesis that I continue to hear is AI eating their moats. But a kind of tool suite solution that they have, I'm not too worried, especially with the market cap of less than $10 billion. I mean, we're closer to $5 billion now. Another thing that I like to do is I like to think, would a big tech company, if possible, come out and buy GitLab at $6 billion? I think that's an easy yes. So that kind of creates kind of like that sentiment for me, where if a big tech company would come out and buy GitLab at $6 billion, why wouldn't I be buying at these levels? So it's one that I'm going to continue to increase into my software solution. But I'm also going to be somewhat careful because it's already becoming, I wouldn't say overweight in the portfolio allocation, but it's getting big in that position.
Yeah, I mean, okay, of course, if a company wants to acquire it, it will have to pay a premium. But the fact that they're looking at it at 6.4 means that they're interested and it's a business worth buying. So that's your rationale behind it. Still a company that's expected to grow quite rapidly over the next couple of years. There have been a lot of reports that are basically showing there are way more developers today than there were a year ago, um, and so that's a tailwind for a GitLab, unless you think that yes, a cloud coding or Gemini coding or ChatGPT coding or Grok coding or whatever, they can eat up GitLab. They can eat up maybe. I mean, I've seen someone from Microsoft from GitHub has left. I think yesterday or two days ago or so, due to I don't know that headline was due to increased competition in the AI coding tools, but I highly doubt that's the reason.
Yeah, I don't
But
think
yeah,
anyone would ever say that. That's the reason they're heading out.
um, unless they're going to one of those other companies and getting paid quite a lot of money.
Better. Yeah, I would say there's also very much like a startup. I think there is going to be a talent war here, just how you're seeing it anywhere else in the AI space.
Yeah. So yeah, GitLab for sure a good name. A
Yeah,
good.
and like yeah, I mean, a $10 billion company, right? I mean, this is kind of, it's not like a YOLO play to say, because there is a business behind it. It is growing in revenue, but it's definitely not a top dog in the space, right? It's definitely not. So it comes with that risk with it. But I think the opportunities right now outweigh the risk that I'm seeing. I think the biggest risk is just that market sentiment and being able to not emotionally trade out, as especially since this company continues to be highly, highly volatile. You can see multiple 40% dips in just the past 3 years for this player.
I wonder when do they report? Probably pretty soon.
Yeah, I mean, software companies are typically in the at the end of the season. Let me see, GitLab earnings. They September 9th is when it's
Oh yeah, they
reported
reported in
as of right
June.
now.
Yeah,
Yeah.
they reported in June. Okay. Some people asked about eToro. I guess they reported stock is up 3.1%. I guess they reported their quarterly figures. Another one of those brokerages. I actually use them because again, easy to
eToro.
use. Yeah, easy to use. Zero
Mm.
commission, although you do pay that $1 per trade, so it's easier to go in and out of stuff. Which answers the question also from Stefan here, asking why Mercado Libre is not in my public portfolio. Mercado Libre is in in the core portfolio, which is in a bank account, which I don't touch because the fees there are extremely high. So it de-incentivizes me to sell and trade companies, and that's why you have the Amazons, the Meta, the Mercado Libres in that portfolio. It's a no touch, no matter what. I can add, of course, which I do, but it's not a trading. Which is also, by the way, the dangers. Something went wrong. Okay, the dangers of zero commission platforms and trading. It's very easy to say, actually, I don't have to pay any fees, any commissions. So let me just buy and sell. So I have that tax hit, but that's something that you will always have.
Mm-hmm.
But eToro, for some reason, it doesn't load up currently. But it's the company that went public this year. It's a company that wanted to go public um, a long time ago, actually. Is it better than a Robinhood? Is it better than a Webull from an investment perspective? I have not looked into it, so I cannot answer that question. Um,
We got about 4 minutes here for open,
yeah,
Neo. Just, I would love to hear your thoughts on Intel. I know you kind of traded out and moved into what you call it,
options.
options. But what were your thoughts on yesterday's comment from the White House and Trump administration? I think they tweeted yesterday.
Yeah, so now he's amazing. I had an amazing path. Um, I mean, I mean, you can see it from the stock reaction. Up yesterday 3.5% and pre-hours 3.4% pre-market. But we'll see because nothing much was said. They say that they'll be in contact and we'll see what happens. Um, but I guess the market liked the fact that he was a bit more positive on on Libra.
Yes. It went from this guy needs to go down to, you know what, his story is amazing.
Like yeah, I wonder what gift he got. People were joking about it on X. He should bring a golden wafer to the White House, etc., etc. But now we'll see. I'm curious to see what happens because it is a very important asset to the US, and there's definitely ways to accelerate this business, whether it's through
And then
contracts or.
I don't know if you saw earlier today. It does seem like there are reports that China is pushing, not banning the H20, but it's kind of just like, yo, I can't believe you're doing that type thing, kind of shaming companies to do it. And reportedly, some companies might be even reducing their orders of the H20.
Yeah, but I did also see that Trump might let nvidia sell Blackwells, but the loser
the
Blackwell.
super duper, yeah, the enhanced, but to the negative side.
Yeah, exactly, the loser Blackwell. But yeah, it's funny how these things happen one after the other. For Roberto here, first of all, thank you for the super chat. Second of all, every Sunday there is a video about the portfolio. The core portfolio doesn't really change. So it's actually now it's Meta, Meta, Amazon, Mercado Libre. There I also have some Google because why not, and Tesla as well. And the YOLO trades from Jose, you, and myself is not in these portfolios because those are YOLO bets. I don't want to impact anything.
Yeah. And for me, Roberto, I do very limited in and outs of my account. So I think, a portfolio update like 3 months ago. I would say it hasn't changed much from there. I tend to have my portfolio at the end of the day is just really on semiconductors. That's all that it matters on. And your occasional software plays like GitLab. And your occasional Roberto made me go YOLO.
Now you have Nebius, you have Applied Digital.
Oh yeah, I do have Nebius. I bought a small, but it's such a small position. It's like it's not even worth it, to mention it.
You you want to increase it. You want
I
to increase
do, but yeah, it's one of those that I don't regret, but it's really good.
Let's put this so we will be up and running. C Limited reported again.
Ding dong 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 dong. That was the morning bell. It opened.
Let's see. Let's see what has happened.
Oh, Marvell. Yeah, so it's usually a lot of semiconductor stuff.
Do we have anything react first? So Ace to Space Mobile is up 15%. I think they released their schedule for satellite launches and stuff like that yesterday when they reported. It's a company that for the quarter, huge miss revenue-wise. I think revenue was close to nothing. And it's a $16-17 billion company. It's like Oklo. Oklo reported zero revenue, and that's a $10 billion company. Mm-hmm. But you are expecting that company to generate maybe $1 or $2 in the future. So we'll see. We'll see what happens. But AST, the revenue impact should be seen much sooner than an Oklo, for example. Nebius continues to go up 3.7%. Rocket Lab is up as well. Now we're seeing a little bit more green. So the market here, the page is updating accordingly.
Big Bear is down about 30%.
Of course, because it's a big bunch of nothing. Like literally, this was the next Palantir. It's the next nothing. It's a bunch of shitcoins. Let's see. Duolingo down another 3%. Like I bought yesterday, and this thing keeps on dropping. It's funny because a quarter and a half ago,
buy more Nebius.
Yeah, maybe.
Except it did the other thing right last time.
Yeah, Duolingo a quarter and a half ago they had that Duo campaign. Duolingo is dead. Maybe they should run it again right now and show the stock price dropping like a dead bird. But yeah, other than that, who's SoFi is up almost 3% today. Very
That's
nice.
wild.
Uber 1.5. Even PayPal is green. Even Google is green. Oscar is probably red. Yes, it is.
Yes. All right. Time to end the show. That's exactly how we end it.
Yeah. Oscar red, Iron flattish, applied flattish. Oklo is green because they generated zero revenue. HIMS is down a little bit, 3.5. Actually, I want to.
Neil, do you think any news from did Nebius move something like Applied Digital with the excitement?
Not really, no.
Like the sentiment? No, it didn't, right? Do you expect
No.
CoreWeave to move Applied Digital?
Uh, I don't know because we already had Applied Digital's earnings report.
Earnings. Yeah.
C Limited is up also a very nice amount, another 18%. I see. That's crazy.
Very
A very
nice.
good I mean, the comeback story here was incredible for the company. On the shoe is also up today, although we have already seen a nice. It's up 8.4, but it was up a little bit more. Who else reported? I think Archer
Yeah,
Aviation.
that was. I saw it was kind of flattish,
No,
up about
it's
1%.
yeah, 2% right now. Um, Any other names? What is GitLab doing? Not
Dying.
much. I think Shift 4 is up. Yeah, Shift 4 is up 4%. I think, yeah, I saw that Jared Isaacman, previous CEO, now I think chairman, executive chairman, bought $16 million worth of shares.
Oh,
Not
that's
bad.
it.
Not bad, I would say. And the stock is only up 4%. This is also one of those names that are extremely attractive right now.
Which one
Very,
is that,
very
man?
good. Shift 4.
Mm.
I'll show you. It's a company, of course, in the payment space, worth $5.6 billion. Forward PE 13.8 times. Expected to grow EPS 29% compounded for the next 2 years. Revenue 27.3% compounded for the next 2 years. It's crazy. Price earnings to growth ratio 0.8. Very, very good company. That is very attractive at these prices right now. Yeah, I mean, open. We're seeing some movement there. I can almost take another vacation. We'll see if it goes maybe to $5 or so. We'll see
Did it
what happens.
really?
No, it's still at 240.
Oh,
It didn't update, but yeah, it's at 240 right now. But yeah, all in all, good open for now for a lot of names actually, especially AST, Space Mobile. Again, the quarter, not good quarter, missed across the board, but it's all about what comes next. And what comes next did impress the market. The speed at which the company is expected to grow and move over the next couple of quarters is the reason why the stock has gone up. But I do want to say that a lot of it is priced in. You cannot tell me that a company that barely generates any revenue should be priced at $17 billion. It's priced at $17 billion because of the anticipated revenue that will come in over the next 12 months, maybe even more, probably even more. So with that, we will be back tomorrow morning. We will probably talk a little bit more about some earnings, maybe
yep.
CoreWeave reaction as well. So we will be back tomorrow. Have a great day, everyone. Thank you for coming.